New home construction at its highest level since June 2008, but are there hidden risks beneath the better-than-expected numbers? Let's bring in Dani Babb, the CEO of the Babb Group, a real estate consulting firm representing more than $5 billion in investor dollars. She also works as a consultant for the National Association of Realtors. Dani, great to have you with us.
Thank you.
The housing starts numbers, a lot of people are picking that apart because of the boost in multifamily as opposed to single family. Is that why you're cautious on the industry?
Absolutely, it's one of the reasons. I'm also cautious because at the same time that these numbers are released, in tandem our new permit starts, which is actually down 4%, although it's been flat for the past several months. And also the builder confidence numbers are still declining for the third straight month.
So what's your sort of big picture view of the industry then, considering the home building stocks are hot, everybody's talking about the strength in housing as the economy strengthens?
Yeah.
Do they have it wrong?
I think they do. I would rather be Caterpillar than I would Lennar Center Pacific in this particular market. When we look at these numbers, for example, the numbers released today, we had a 7% overall gain, right? But of that, we had a 31% increase in multifamily, and we had a 5% decrease in single-family residential. And generally, multifamily makes up about 20% of this number, and it made up 40% instead.
But if you look at like that, I heard that a lot today. I mean, if you go back, the restatement on the single-family homes was very high, running at very high levels, obviously at down 21% inventory. Prices are running up 10%. You have birth rates up 2%, and household formation is going up. How do you fight all that at the same time with one data point?
It's not just one data point. If we look across the country at where housing starts were, we know that they were actually decreasing in the Northeast. We know that they're increasing in the Midwest and the South, and there's a small increase in the West. If we look at that and we look at job numbers and we look at the fact that from not only anecdotal evidence but also data points, we see that we have record low interest rates and we have very, very low inventory out there. And we know that consumers are waiting on the sidelines looking for a better price before they put their home on the market. When we have that hit at the same time that all of these rentals then hit the market, and a year from now when they're built and there's a ton of multifamily housing available, I see it great for stocks, but I don't see it great as a housing recovery.
So how important is the employment number in this whole equation? I got to believe it's extraordinarily important. And if it starts to trend back the wrong way, which I think it will at some point, maybe these housing stocks do then take a bath.
I agree with you. I mean, I personally short housing stocks right now, and I'm going to maintain that position for some time for that reason.
So where are the opportunities? What are you telling your investors?
Multifamily listings, off-market listings. Yeah, multifamily and off-market, and also single-family flips. We're seeing a lot more people purchase in bulk. And
but the last time you were on, I mean, we were talking about the investors, the funds that are starting investing in single-family homes, and you're highlighting the potential of a mass exodus once the time hits to sell.
Yeah, absolutely. I think that's still the case. I do agree.
You still like that space?
I still like the space in the very short term, 3 to 6 months, not new construction. Buy to flip or buy to hold and rent out over the long term. If you can get something 20, 25% under value in some underwater areas.
In your view?
Between
beyond the exit of these funds?
Yeah, 7 to 10 years, absolutely.
Right. Dani, great to have you with us.
Thank you.
Dani Babb of the Babb Group.